What's going on, Moon Gang? This is your Dumb Money Update for today, Thursday, December 9th. Now, we're going to be talking about the bloodbath between the equities market and the crypto market. It's a sea of red. I can't put it lightly. That's exactly what it was, and it kind of hits you right here. So we're going to be talking about what's going on. We'll be going over a little bit of commentary from Jim Cramer on the overall market that I think you're going to find surprising. And then we're going to be diving into kind of the surprising reason of why Ken Griffin bought the Constitution. And finally, I want to wrap up with, I think, something that's pretty important, but a little bit of proof that Wall Street institutions are definitely afraid of retail traders. So with all that being said, let's hop right into it. Okie dokie, artichoke, time for a little bit of a political update. Senate clears last major hurdle to raising debt ceiling. So just a little bit of a recap for you. There is concern of the first ever federal default. And right now it's expected that would hit, if we don't pass what we're about to talk about, by about mid-December. But it looks like things will be a-okay. The Senate on Thursday cleared away the last major hurdle to raising the debt ceiling, effectively ending a Republican blockade and all but guaranteeing that Congress will be able to move quickly in the coming days to steer government away from a first ever federal default. So this is now passed by the Senate. It was passed earlier in the week, Tuesday, by the House. And at this point, it just has to get sent over to the president. And then the president signs, it becomes a law, and we will avoid the first ever federal default. So with that, that's some positive development there. But even with that positive development of course, this political gridlock, when you get over it, usually that's some good news, but the market did not react that way. First of all, I just want to point out the right side of my screen. Red, 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 red. Like I said, it's a bloodbath. I know when you look at the S&P 500, it doesn't feel that bad because that was down 0.68%, close to support 460. Hopefully we can catch yourself very soon and get the breakout of 470. The Q's a little bit more extreme, down 1.5%, maybe targeting this gap fill back down to 387. Would love to see a breakout of 400. And the most extreme, down 2.26%, at least in terms of indices, was the Russell 2000, and that in fact did gap fill today, the high from the 6th and previous resistance around 220 and some change. We did officially gap fill, hoping it catches itself soon. If not, we're watching 217-ish. Would love to see it turn back around and get out of this. Now, across individual equities, AMC down 9%, GME down 10.3%, Prog 9%, Lucid got hammered 18.4%, Tesla 6%, Rivian 5%, Nvidia 4.2%. I mean, someone needs to let Pelosi know about this. She knows it's down over 4%. Let her know. I guess she was busy working today, but she needs to get back into getting Nvidia higher and higher and higher. Not that surprising that Robinhood was down 7.6%. LGVN, I mean, as you can see, a bloodbath. Let's take a quick look at crypto right here. Bitcoin, we're at the 1 week, but let me drop it to the 4 hour. This went up above 50 and then got smacked down to 48. Ethereum taking a little bit of a slip. Solana taking a little bit of a dive there. Avalanche coming off of 125 all the way down to 85. In fact, the only green one right here is LRC. Loopring. So I'm a fan of that just because of its connection with GameStop and building out these marketplaces. Hey, so at least we have one thing. It's up 0.66%. I guess we could take that as a bit of a winner. And with this, there might be a lot of speculation of why is this all happening? What's going on right now? I personally think that it doesn't really relate too much to the Evergrande situation. I think this is more of, we saw a lot over the past 3-4 days. We saw some green. People were buying. It ran into natural resistance, and then people started profit taking. And then all of a sudden, it got a little bit too much, and we saw a bit of a panic. Or it could possibly relate to this. This was posted just 2 hours ago from Cramer himself. Jim Cramer shares his 2022 game plan and best stock ideas with the CNBC Investing Club. Cramer kicked off the special live event, CNBC Investing Club, Jim Cramer's game plan for 2022, by breaking down his outlook on the economy. He said this is the strongest economy we've ever seen heading into 2022. Did anyone send him a screenshot of their watch list today? Strongest economy we've ever had? A sea of blood? I don't know. It seems like the overall market gods might just be fading Jimmy Boy here. Potential. Moving on, very interesting story. Billionaire Ken Griffin's son told him, you have to buy the Constitution. I don't know if they're at all related to Nicolas Cage when he's like, we have to steal the Declaration of Independence. But I guess Ken Griffin's son said, you have to buy the Constitution. Daddy, we're not going to be friends if you don't buy the Constitution. He was like, I guess I got to buy it. So here's an interesting story. And this is from Griffin himself. I was sitting at home in New York, and my son calls me to say, Dad, you have to buy the Constitution. Now, I would be lying to you if I myself had not had that conversation with my own father. The amount of times I'd be leaving the bars, 2 a.m., 3 a.m., call up my dad, and it always starts off, Matt, you can't be doing this again. And I'm like, Father, shut your mouth. You need to buy the Constitution. We've all been there. If you have not had this conversation with your father, you're not telling the truth. Griffin didn't give his son's specific reasoning for wanting his father to make the purchase. Well, we don't know. This is really funny. This is a little look into Griffin's inner dialogue. I told myself, hang on, let me do the voice changer. I told myself,
I am going to own this, he said. I don't do that very often.
Hey, it's not very often that one of the world's richest people tells themselves that they're going to own something. It doesn't happen often. If you think that happens often, it doesn't happen often. But when it does, it's because his son calls him and tells him to buy the Constitution. Let's get one thing clear on that. A wild story. If this alone isn't confirming that we live in a simulation and it's just all fake and nothing really matters anyway, I don't know what does. And with that being said, this leads me into another aspect of us living in the upside down, that yes, Wall Street institutions are very much afraid of retail. JP Morgan offers hedge funds a way to dodge meme stock shocks. Around 30 institution clients are testing the screening tool. Retail investors have increasing sway in stock markets. Yes, we do. JP Morgan Chase & Co. is testing new research product to guard big ticket clients from losses linked to the meme stock phenomena that has captivated Wall Street this year. Quick little moment of silence for Melvin Capital, for White Square, and all the other related ones that didn't know what the hell they were doing. Okay, moving on. The screening tool is a data set on U.S. retail investor trends sold to institutional clients. It provides predicted retail flows, significant buy or sell signals on single stocks, negative or positive sentiment based on the bank's internal data, and scouring of social media forums such as Reddit and Twitter. The scouring. Basically, they're underpaying a shitload of interns to say, what's going on that thing? And they're like, I don't know. I think they're talking about this stock. And they're like, put it in the report. That's how I at least picture this all playing out. Data shared with clients includes the size of retail flows, the most discussed stocks on social media, and companies that are likely to face a retail squeeze. And then they just define it. When small investors rush to a stock that hedge funds are betting against. That's kind of weird. When small investors rush to a stock, it doesn't have to be small investors. It could be anyone. A squeeze has nothing to do with the size of the investor. It just has to do with the fact that they're buying a stock that's heavily shorted. So that's a weird definition, Bloomberg. But overall, the fact that there's even that they can provide this, the fact that JP Morgan thought of it and then 30 asset managers and quant fund managers was like, we need that, shows you that retail is obviously a rising force within Wall Street, and they're doing their best to, I guess in a certain way, protect themselves against it. I thought all of this was pretty interesting, and I wanted to share it with you. Beyond that, I would love to get your commentary on any of this. What's going on with the meme stock, I guess data prediction, what's going on with Ken Griffin and his son and the super weird inner dialogue, Jim Cramer and the fact that the overall market is attempting to fade him, or just the fact that it was a sea of blood today. I would love to get your thoughts on all of that in a comment below. Now, if you want to help me out, I would greatly appreciate it if you could drop a like, and if you want to join up with the Moon Gang, hit that subscribe button. That type of engagement just helps out with the algorithm, and it gets it promoted to all the other people people who might potentially be interested, and it means the world to me. Thank you, thank you, thank you. And until I catch you next time, from me and Cher, best of luck in the markets.